the market remains stable as we head towards Christmas and the end of the year. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, December 8th. We know that selling or buying a home can be confusing and stressful. So we use this series and our combined 50 years of experience helping clients sell or buy homes to explain what the latest San Ramon real estate news means for you as a homeowner thinking of selling or as someone who is looking for a house that you'll love to call home. Let's start off by looking at this week and how it did. Start with active homes. There are 15 active homes on the market, which is down from last week's number of 17. The average asking price this week is $1,793,000, which is down from last week's average asking of $1,930,000. 4 homes went pending this week, one more than last week, with an average asking price on those pending homes at $2,155,000, which is up significantly from last week's average asking price of $1,599,000. And 15 homes closed this week. Significantly more than we had last week, and the average closing price was $1,670,000, which is higher than last week's one house that sold for only $1,475. Okay, so now we know how the market performed this week. So now we can look at the broader trends that help us know where the market might be heading in the future. But before we proceed, if you do find this information helpful, don't forget that you can subscribe so you don't miss out on future updates. And why not share it with a friend? Everyone deserves to be in the know about their local real estate market. Okay, let's take a look at the broader market indicators, shall we? Inventory dropped 11% this week, and we are now down, like I said earlier, to only 15 single-family homes on the market. This is 40% lower than last year's inventory during the same time. Oops, there we go. Last year, same time. Oh, give me that. There we go. With the lack of homes listed as coming soon, it is unlikely that inventory will rise before next year. And the turnover rate supports the idea that inventory will remain low. The turnover rate remained in the slightly higher than average range this week. It did slow down a little bit from 124% down to 116%, but that remains a very healthy turnover rate, especially when you compare it to our market neighbor to the north, which is Danville, which is down to 25% of its normal turnover rate. What this really means for San Ramon is that our property values are seen as more affordable, so the slowdown isn't affecting our market nearly as much as some more expensive markets in our surrounding areas. Another positive market effect that we are seeing in San Ramon due to the wider variety of lower priced homes is that sellers are still seeing sales prices exceeding their initial offer price. Homes are closing at an average about $20,000 over the list price, or 1% over asking. The over-under metric and turnover rates are very closely related, and as long as the turnover rate is over 100%, you can expect that the sales price will average higher than the average asking price. One soft spot in the market this week was the rolling average sales price. It dropped significantly this week from over $2 million last week down to just under $1,825,000. That might sound like the bottom dropped out of the values in San Ramon, but the reality is that with the high interest rates, we are just not seeing the more expensive homes in San Ramon sell. If the turnover rate was also dropping, these lower sales prices would support a slowing market. But with the absence of other falling indicators, I think this stands as an outlier to a generally stable market. The Triple Q Fund had another very flat week this week. The fund rose about 1% from last week. While this is not substantial growth, it stands as another reason why buyers will remain confident in their ability to purchase a new home in the area. Buyers in our area depend on their stock portfolios to have large cash available to put more down to help combat the higher interest rates. And speaking of those higher interest rates, Those continued their recent trend of dropping this week. We're down 19 basis points from last week, and if this trend continues, we'll be under the 7% mark by next week. Interest rates in the 6+ range will still slow down some buyers and sellers, but it is a move in a good direction. Interest rates coming down will mean buyers can afford more, and more importantly, will encourage sellers to re-enter the market, giving buyers more inventory to choose from. Overall, this week was very positive for our market. It is still a slow-moving market, but considering the holiday season and the past few months of a sluggish market, it is nice to see that all the metrics are stabilizing in the positive range. Interest rates will continue to be the biggest hurdle for our market to get past, but if the market can hold steady for the winter, I think it could lead to a robust market this coming spring. Thank you for joining us for our update this week. We're going to take the rest of the year off from these updates, but we'll be back next year with our regular market updates. We hope this summary and commentary helped you understand how our market is impacting your options. And if you have any specific questions about navigating the market to buy or sell a home, don't hesitate to drop a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe holiday weekend and a happy new year. And we'll see you next year with a new update.